Hello, I'm Hickey from interest.co.nz and welcome to another double shot interview. This is where we interview a CEO or a minister or whoever about something that we're interested in. And today we're interested in gold, with a big move in the gold price overnight to over $1,200 an ounce, with turmoil on the European financial system and people asking some basic questions about what is money, what is around for a while. I'm here with Mike O'Kane from the NZ Mint. He's the head of Bullion trading. G'day Mike, how's it going?
Hi Bennett.
Can you tell us what the debate around money systems and gold is at the moment and why people seem to want more gold? We're seeing that with the gold price up.
Probably the easiest way to take it back to bare bones argument is the difference between a fiat economy, which is what we've essentially been living with since the early 70s, versus a commodity or a goods-backed economy. So fiat economy is where there's no basis to what is used to issue currency, so therefore, short way of putting it, the governments have the right to print as much cash as they want, there is no limits, versus a commodity-based currency whereby they have to have X amount of what commodity ever they're using. Historically it's been gold, before they can issue more cash. So it's a value-based economy versus fiat.
So when we say fiat, we're talking about paper-based versus a gold standard-based economy, which is where every item of currency is backed by some gold in a vault. And at the moment, all around the world and in New Zealand, we have a bunch of fiat paper-based economies.
Yeah.
And in the last couple of years since the global financial crisis, many people have said, there's a lot of money printing going on here, how much can we really trust it? How much is that a factor in the demand for gold going up in the last couple of years?
Well, gold historically has been anti-inflationary, so the expectation is that if you continue to print large volumes of cash, which is what's going on at the moment to try and prop up a lot of economies that are in dire straits, there's only one outcome from that, and in the long term it's inflation. There is the counter-argument that we'll go through a short period of deflationary issues, but we still will end up with inflation, and depending on who you talk to, either hyperinflation or possibly worse. Essentially, the demand for gold is driven, there's two aspects. One is people want to hold something of value. Now, property has similar aspects to gold, it's very similar overall themes, but you can't carry a property with you, and they don't tend to be quite as liquid as gold is. It's tradable around the world. It has the same value around the world, and therefore it's much more liquid, much more easy to process than, say, a piece of property up north or down south in a quiet property market you get lumbered with. Off the back of that, there are still calls for a retrenchment back to the gold standard, which is also good for the value of gold in the long term if we do look at that, because the amount of gold currently held at the price it's held is not nearly enough to cover the amount of cash currently in the systems. So ballpark figures, the expectation is that an ounce of gold, if we went to a gold standard, would suddenly become worth around $30,000, maybe $35,000.
Do people really believe they were going to go back to a gold standard?
There's a lot of calls for it. There are pros and cons for it. On the positive side, it does mean that you have a value-backed currency. You know what your dollar's worth. There's no making stuff up on the fly. The cons, there isn't that much gold in the world. $30,000 is a lot. Historically, when we had the gold standard, the gold price was fixed. It ranged a short amount, but it was around $35, $36 US an ounce, and it never moved from that. So therefore gold then stops being the great investment that it is at the moment, because it's open market and becomes a fixed dollar value thing.
Now, one of the arguments against holding gold as an investment is that you couldn't really earn any interest on it. I mean, how do you get around that issue?
Well, to all intents and purposes, you still don't. It's something you buy, you hold it, and then you either sell it when it's worth more, or you do what a lot of people have done throughout history and pass it on down generations. Hindu women get given gold jewellery because they can't own property, they can't have investments, and so they get given gold jewellery that's worth something to them. No matter what happens in their marriage or in their life, they have value. And that's where gold comes into its own. It always maintains value. The amount varies, But no matter what happens, you have something of value in your hand that no one else has any control over.
Now, this business of having it in your hand, tell us what was happening in the world of gold trading in around September 2008 and what you were having to do to get your hands on the stuff.
Well, it was a fantastic time. It was a time where I spent most of the month with more than 2 phones up to my ear, trying to talk to multiple people. The key thing to remember when buying physical gold is the objective is to buy something that is recognisable. So you want something you can easily trade. You don't want to have to get it assayed or reviewed to sell it. You want to be able to sell it easily. And something that is of a purity level, in New Zealand, it has to be purity level 99.95% or higher. We generally say 99.99%, which means it's GST exempt, it's classed as currency. The reason you want to do that, well, the difficulty in doing that, should I say, is the fact that the manufacturing process to get gold at 99.99% pure and in a format that's recognisable globally, it takes a while. And in 2008, we saw a demand go from sort of a nice even number that we'd seen for the last 2 or 3 years. It tripled in a month globally. And all of a sudden, everyone's stockpiles of gold had been sold, and everyone was scrambling to get more made. And of course, you've got a time frame of around about a month to 2 months to get anything made from scratch. We ran out of stock. So did most of the world.
And what's happening now? What's happening now with actual gold holders?
Supply's actually back onto normal levels. There are some areas that have taken precautions to make sure they've got enough gold going forward. Overall, if we went through another 2008, for example, we'd probably run out of stock in about a month and a half. Some people won't, because they've taken precautions. And I can guarantee you that every single mint in the world, or at least every single mint and every single manufacturer I deal with, has increased their potential output dramatically. I know one mint in the States that went from being able to produce 80,000 silver blanks a week to 1.8 million silver blanks in a week because of that. So their supply will it will ebb and flow as with any commodity, but usually you should be okay within a time frame.
And what about this idea of peak gold? Because not only are people buying gold to hold, but you've got computer manufacturers and jewellers who are actually using the stuff.
Yep.
And there's only so much that's in the ground or easily accessible. And some people have talked about peak gold, but people have been mining gold for a long time, and often miners seem to find a way to get the stuff when the price goes up. I mean, how realistic is it to talk about peak gold?
I personally don't tend to believe in it. It's not so much that it's not possible, it's just that we don't know how much gold's under the ocean, for example. Now, if you take oil as an example, people are mining oil out of the oceans at a considerable expense. And if you look at the Gulf of Mexico at the moment, there's a prime example.
I quite like the gold to get out of the pipes and wash onto the shore. That would be quite good, much better than the oil.
I think it'd sink. It's fairly heavy. It's not so bad. But it comes down to what it's worth. And the more it's worth, the more people go to more extremes to try and dig it out and find places for it.
Now, when you've got the gold, I mean, how do you know it's safe? How do you know it's there? I mean, what precautions do you take to look after it?
On a personal level, I would never deal with someone I wasn't comfortable with. So always make sure you're dealing with someone who's accredited or recognised, has a long trading history. Make sure you're dealing with products that are recognised. So, for example, in New Zealand, the gold kiwi is probably the most recognisable gold coin locally. Make sure that the coin you have meets the specifications that are required for it. If you have any questions, or if you're dubious or question anything about the transaction, don't wait, check it out. At the end of the day, holding physical gold in your hand is the key to everything, but there are other options available. Obviously, you can buy it and hold it with someone, so you can put it in storage, so allocated storage, unallocated storage, which is where you buy a share of gold. It may not be in your hand, but you know that the person holding it is licensed to do it. They're audited, so you know that it's definitely there. And you can even get into exchange traded funds and things like that, where you're not buying gold, you're buying a share of a value of gold.
Great. Well, there we have it. Another double shot interview. I'm Bernard Hickey. This was Mike O'Kane. Thank you very much, Mike. Good to see you in
Thanks,
here.
Ben.
Mike O'Kane is the head of Bullion at NZ Mint.